Life insurance. It's one of those topics that can feel super complicated, maybe even a little intimidating, but it really doesn't have to be. So, in this explainer, we're going to cut through all that noise. We're using a simplified guide from Dr. Sudendris SG to break it all down and show you how it actually works step by step. Let's start with the real question, the one that's at the heart of all of this. What is the absolute best way to protect your family's future? Seriously, forget all the financial jargon for a second. At its core, life insurance is just a tool designed to answer that one simple question and give you some real peace of mind.
All right, so what is this thing really? Let's dive into the core promise of life insurance. We'll start with the basic agreement at its foundation. Okay, at its heart, life insurance is just a simple, legally binding promise. You make regular payments to an insurance company, and in return, they promise to pay a much, much larger sum of money to your loved ones if you're no longer around. That's it. It's a promise of financial stability right when they'll need it the most. In the process, it's just as straightforward as the promise. Step 1, you pay these regular amounts, which are called premiums, and that keeps your policy going. Step 2, think of that policy as your safety net, and it stays active as long as you're making those payments. And then step 3, if you pass away while the policy is active, your family, your beneficiaries, receives the payout. That big payout is called the death benefit. So let's just lock in those two key terms, because you'll hear them a lot. The premium, that's what you pay. Think of it like a subscription for protection. The death benefit, that's the big lump sum your family gets. The whole idea is to turn those small, manageable premiums into a major financial safety net down the road. Okay, so now that we've got the basic idea down, let's look at the different ways this can all be structured. How do you pick the right plan for you? Well, it all starts with understanding the main options on the table. The first, and honestly the most straightforward option, is called term life insurance. And the best way to wrap your head around this is to think of it like renting a house. You get full protection, but it's for a specific period of time. This is insurance in its absolute purest form. It's not this lifelong thing. You just pick a period, a term, say 20 years, maybe to cover you until your home loan is paid off or the kids are grown up and on their own. And because it's so focused on just one job, protection, it is usually the most affordable option out there. Now, on the other side of the coin, you've got whole life insurance. So if term insurance is like renting, then whole life, well, that's like buying the house. It's permanent and it actually builds value over time. Right, so this policy is designed to cover you for your whole life. But here's the really key difference. A part of your premium goes into a savings account, building something called cash value. This is money that actually grows over time, and you could even borrow against it later in life if you needed to. So it's both protection and a financial asset. Pretty cool, right? This table really helps put it all together in one place. See, at the top, you've got term life, pure protection, fixed term, no savings. Simple. Then there's whole life, which we just talked about, lifelong protection plus that savings part. Now, check out the next two. A ULIP, or unit-linked insurance plan, is similar, but it links your savings to the stock market, aiming for higher growth. And finally, an endowment plan. That's more like a savings goal plan. It runs for a fixed time and pays out a guaranteed chunk of money at the end, which is awesome for things like funding a college education. So beyond those main types, some plans are actually built to help you hit very specific financial goals for your family. They're kind of like specialized tools for a particular job. So let's take that unit-linked insurance plan, the ULIP. Who's this for? Well, imagine someone like Ravi. He's a young professional. He wants protection, sure, but he also wants his money to grow through market investments. With a ULIP, part of his premium gets invested, combining that safety net with a real chance to build wealth. Or picture Aisha and Rohan. They're new parents, and they're already thinking about those huge college fees down the road. A child plan is designed for exactly that. It helps them build a dedicated fund over many years, making sure that money is there for their daughter's future no matter what happens. And finally, think of Mrs. Gupta, who's planning for retirement. Her goal? To make sure she has a steady, reliable income long after she stops working. A pension plan is built precisely for this. It helps her build up a fund during her working years, specifically so it can pay out a regular income later on. Now, once you have a base plan picked out, you can actually customize it. The best way to think about it is like adding optional features to a new car. In the world of insurance, we call these riders. So what the heck is a rider? It's just an optional upgrade for your policy.
a little add-on that gives you extra benefits for specific situations. You're basically tailoring your policy to cover the what-ifs that worry you the most, whether that's a serious accident or a major illness.
For example, an accidental death benefit rider pays out an extra chunk of cash if your death is the result of an accident. A critical illness rider can be a total financial lifeline, paying you a lump sum the moment you're diagnosed to help cover costs while you focus on getting better. And the waiver of premium rider, this one is incredibly powerful. If you become disabled and can't work, it actually pays your premiums for you so your coverage stays in place.
Okay, so you might be wondering, what keeps this whole system in check? Is it just random? No way. There are rules and processes in place specifically designed to make sure everything is fair and focused on protecting you. Here's the crucial point. This industry is regulated. In India, for example, you have the IRDAI, which sets the rules and makes sure companies are acting ethically. Professionals also use a process called customer profiling to really understand your situation. The goal should never, ever be to just sell you a product. It's about matching the right product to your specific life story.
And at the end of the day, there's no single right answer for everyone, because every single one of our stories is unique. We really hope this explainer has given you the building blocks to understand your options. So now the question isn't just how to get life insurance, it's why. When you look ahead, what protection does the next chapter of your story need?